A lot of traders seem to get confused when it comes to identifying the right time frame to use when they are doing their top-down analysis. And in this video, I want to show you how I personally use a specific time frame and how I do top-down analysis without going through the weekly, daily, 1 hour, all that. I'm going to show you a very simple way of knowing whether to buy or sell. If you are new to the channel, subscribe. Let's jump into the video. Alright, so I want to show you how you can catch a big move like this without effort. So first things first, we need to go to the basics. And the basic is just understanding candlesticks and how price moves. So here is a representation of what a candlestick looks like. So you have a high and you have a low. Imagine this as a daily candle. Now, if you know how price moves, then you know this theory. Breakout is a sign of strength, which means continuation. And then failed breakout, so FBO, I'll use initials, means reversal. So a failed breakout, I'll show you in a minute what it looks like. But these are the fundamental building blocks of the strategy. Alright, so say for example, this is Monday. If Tuesday breaks out like that, then using that theory, then we know there is a very high probability that price will continue going in the direction of the breakout. And so if this is Monday and this is Tuesday, then on Wednesday, you would be looking for an opportunity to buy in the direction of the breakout. Now, if you know where the whole day is going, then you already know whether to buy or sell. And it's that simple. Now, let's talk about the failed breakout. So a failed breakout is a breakout. So at some point, this candle was up here. But then price is pushed down. And then it closes back inside of this high and low set on Monday. And now this is what you call a failed breakout. And a failed breakout is a reversal signal for the next candle. So your goal is only to predict this one candle. And if this one candle is 24 hours, then you have a lot of time before this candle goes down. And you just have to find a way to time the market. As it's going down, you get in. That is exactly how I trade. It's that simple. Now, let's look at how this applies in real life. So, yesterday, we caught this move. Now, it was outside of our timing window, but the basic process to catching this trade is still the same. And that is what I want to show you today. So, we use the daily time frame to identify where price is headed. So, we start on Monday. So, when we look at Monday, this green candle is Monday's high and Monday's low. So this is Monday. Look at what happens on Tuesday. Tuesday actually pins the high. You can see this pin, and also pins the low and then closes inside of the high and the low. So here we don't have any signal because we have a failed breakout at the high and a failed breakout at the low. Then the next day, so this is our new low of the week here. This is our new high of the week. Then the next day breaks out and closes outside of the range as a breakout. So this is a continuation sign. All right. And so now what we want to see is a failed breakout either at the low or the high. On Thursday, price stays inside of the high and the low, which is called an inside day. But notice on Friday breaks out and then closes back inside of the range. This is what we call a failed breakout. And a failed breakout is a reversal signal for the next day. So when we come to the screen on Monday, after we've gotten this signal, we already know we want to buy. And so that concludes our top-down analysis. We know what we are supposed to do. Now, the next challenge is to identify when to get in. So what is the process to get in? Now, this is where I go to the 5-minute time frame. And then I have a process. So first things first, I don't just come to the screen and trade for 24 hours. I come to the screen and trade for only 2 hours per session. So for Asia, the timing window is between 9 and 11 p.m. New York time. Then for London, it's between 3 and 5 a.m. New York time. And then for New York, it's between 9 and 11 a.m. New York time. So on this trade, we actually observed it in the London session. So what I'm going to do is I'll put a line here at 3, and then we will let price play out until it reaches our timing window. Now, if we don't get a setup in our timing window, we don't force issues because we have opportunities in the next session, the next day. The markets will always be around. So when I come to the screen now at 3, first things first, I want to trade at the low. I want to buy. So I want to buy where? At the low of the week. So this is the low of the week here. So I want to buy below the low of the week. So first things first, come to the screen at the right time. The second step is we wait for price to clear liquidity at the low of the week in our London session. So what happens? So this candle here clears liquidity. After we have cleared liquidity, we have this most recent high. And we can see it's a zone of rejection, this area here. So we want to see price rejecting this area so that it becomes a level. So what happens? Price rejects it. We have this one touch, this second touch. This is the third touch. And price continues going down. So our thinking is if price breaks above our level, then that is our entry, we get in. But price continues to go down, no problem. So what we do is we identify another level. So we have the most recent low here again. And this time we already have 2 touches. So notice price if you follow price goes down, goes up, then goes down, then goes up, then goes down. So we already have these 2 like heads. Now we have a level. So our thinking is now if we break out and close above this level, then we get in. So what does price do? Price continues doing its thing and then boom, it breaks out. Once price breaks out, that is your entry. Put your stop loss a few pips below the breakout candle. And then you are targeting the high of the day. And then you let the market do its thing. So this is your exit criteria that I use. I either get stopped out, and then price either hits TP, or I exit at the candle close. So remember, we were predicting one candle, and we are predicting that if you have a failed breakout, then the next candle is likely to be a reversal candle. So overall, even if you get in at the low and you just let the market do its thing, you will still be in profit at the close of the day if you are correct and the candle is bullish. So what happens? So price just consolidates, and then in the New York session, that is when we see the move up to the high of the day. And that was an easy 1:7, 1:6. If you want to learn this strategy in depth, I have a free course explaining every single thing in my school community. Link will be in the description. So go check it out and I shall see you on the inside. If you got value from today's video, subscribe, and if you have any questions or comments, don't forget to put it down in the comment section and I will see you in the next video. Peace out.